Good day. Ira Epstein of Linn and Associates with your metals market wrap-up for this October 22nd, 2017. A down day in the metals. Late in the day, we had a bit of a rally as the stock market broke, and the last trades in gold were over the 1490 level, around 1753 in the silver. The silver market came down to some important numbers. For those of you that look at my special reports on the silver, you might want to go to our website and see what that number is. I'm not going to spill the beans here. Suffice to say, the stock market down in most indices, Russell's still up, dollar up a little bit, currency's down, and Brexit. Brexit saw Mr. Johnson get a win and a loss. He won in the sense that it appears that Parliament likes the plan he did. However, they don't like it enough to not have a long, lengthy debate about it, and that means it will not be passed in any manner for the October 31st timeframe, which leaves Mr. Johnson in a lurch. Is he going to play the game and just work along this all the way into possibly 2020 of January? I don't know. Turkey and Russia have resolved the issue of the Russian border with Turkey. The Syrian border with Turkey. I call it Russian because in my brain, the fact that Russia is putting its forces in there and they're going to be patrolling that with Syrian forces and Turkey, you think that they didn't get their big imprint all the way down there? They did. They've been there, let's be honest. They were the backer of Syria, but now you've got a whole different border, and Mr. Erdogan did not get what he wants. He's got that border, but it's nowhere near as deep as he thought it would be or the size of the total landmass that he wanted. When we look at gold, you can see how it's been working its way down towards this 18-week moving average at 1470.470, and that's the major support. Last trade, 1481.70. So you're within very short striking distance of it, and I'm still looking for support to potentially show up there. I want you to see the volume and volatility. I'm not really showing volume, I'm showing more or less the lack of size of ranges, which means volatility has really been coming out of the market. You can see it here visually. Now, as you take a look at the market, if you were to get over 1498.70, you would break the current bearish pattern, but the pattern is bearish right now. You have that pattern of lower highs, lower lows. That's bearish unless 1498.70 is taken out. When I put moving averages on it, as you can see, this has been the battleground, the 18-day average for the gold market. If you were to negate the bear trend, you've got to take that out and close over that 18-day average. Where's the support if the market's got resistance there? Well, one level could be this 1465.10 level, the 100-day average, but a better support ties right in with what we're looking at on the close-only chart of 1475.50. That's very, very close. So I'm getting a lot of numbers in this 1475 to 1465 area that offer potential support, but that's no reason to be friendly. The bears control this market right now, and momentum is down, but finally in oversold territory at a 27 reading. So bears controlling the market. The question is, can they get it into this area, or does the market give them a pop beforehand and just do what it's been doing, going nowhere for a while? On the GLD ETF, it's very similar to the futures, except you're not oversold. You got a 31 reading. Bearish in the lower highs, lower lows, and until yesterday's high gets taken out of 140.76, the bears control this market. Resistance 140.65. If the market lets go to the downside, support comes in at 138.89. In GDX, the bears control this market. Lower highs, lower lows, exceptionally oversold right now. If you break from here, I'm looking for support at the lower Bollinger Band. And like in the futures, the first challenge of Bollinger Bands, when you get down to it, I look for the pros to take money off the table. It's only midweek tomorrow, so I don't see that being a problem for the market. When we come into the gold-silver ratio, I wouldn't be surprised if you just keep hanging around this 18-week average of closes. While you closed nice and lower yesterday at 84.54, if we come back to what this close was, it was 84.56. You got the lower close. So you have, if you look at it, a higher high there, then you break down to the lower close, you're just back and forth. Yes, like a swing line, I visually look at how the closes are. The bias is down, but you're not trending just yet. Get back under this 1454, this 84.54 area. Is that what that was? Yeah. Then, on a closing basis, I get bearish. Bearish means I'm actually getting friendly the silver market over the gold, but you're not there yet. In the silver, look at the battleground, the 18-day average of closes. The trend is higher lows, higher highs, but you close today at 1750, which means you're under the 18-day average of closes, so the bias is down and momentum is pointing down right here. So what we have is a market that if it takes out 1742, leaves the uptrend, that doesn't mean it's starting a downtrend. Why? Because temporarily at least, you have the pattern, even if you take that out, of a higher high, then a lower low, and no matter how I look at it, the lower Bollinger Band of 1720, the first challenge of it, if it were hit, would get me to the point where I'm saying, okay, this market doesn't look all that bad. Now, what do you have to do to keep the bull trend going? Ideally, not take out this 1742, pop through today's high of 1768, and that would give you the pattern of higher lows, higher highs over, you got it, over that 18-day average and put into play the 1790 level. It would probably negate this move down in the momentum as well. We'll see what that does tonight. In copper, I'll stay with what I know. The first challenge of a 100-day average and an upper Bollinger Band, as you did back here, often results in a lot of resistance. That's what I'm seeing in this market. I realize the reason the market is up is because of the unrest in Chile, one of the world's largest copper producers. Now, you've got ports on strike there, you've got mines on strike, there's big unrest going on, civil unrest, big problems. But that takes supply off the market. Is it enough to keep the market bid? In the platinum market, we have a pattern where the market rallies back to this 18-day average, runs into resistance, hasn't been weak enough to get down to the 100-day or the lower Bollinger Band either. It's basically going sideways, but you've got divergence. You've got lower highs, lower low history. You have momentum up and bias down. If you can take out 902.90, if that occurs without first taking out this low back here, what happens is you can end up with higher lows, a higher high, and put into play wherever that upper Bollinger Band is as the first test of resistance. In the palladium, it's still the strongest of the metals. It's kept its embedded reading. The market's up today as the other metals are mostly lower. Still the higher lows, higher highs. However, this market is starting to show signs of wear and tear. It's got a lower high, it's got higher lows. You need to get over that 1746.20 and stay there with a bit of conviction, which won't be easy. You'll be having that Bollinger Band right in front of you, but that's what the market's needing to keep this going. Last in the dollar index, I'll stay with what I know. The first challenge of a 100-day average and Bollinger Band is often an important zone that the market, even if it slip slides a bit through it, comes back and tests. That's where you're at right now. Now in the dollar index, the trend is embedded. We have both numbers today, over 20 in the slow stochastic, under 20 yesterday, under 20 the day before. That tells me that on rallies in between this 100-day average and an area up here, I'm still looking for the pros to be short sellers in the market. I discussed silver in great detail in my special report that I published yesterday. Now, it only stays up on our website 5 business days. If you haven't seen it, the simple way to go see it is simple. Just go to our website, go under a research, you'll see Ira's metal report, click on it, and away you're going. I cover in this particular report both a quarterly chart on silver, a monthly, the 15, the 5, and the 30-year patterns in the silver market, the historical patterns, the weekly charts, the daily charts, and a whole host of these indicators, and I give you an idea as to where I think the market is right now. So if you'd like to see that report, it's free at this point. Simply go on to the website, take a look at it. Down the road, why I said these points, you'll only be able to see a certain amount of my special reports unless you become a subscriber or have a trading account through us. It'll be one of the two, your choice. But right now, the counter's going and you're able to see it. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.